Interest in responsible investment has grown significantly over the last decade, but there is still considerable confusion and debate around what it entails. Responsible investment is a broad term encompassing different approaches, but four key elements make up its essence. The why is sustainability, the how is the ESG framework, the who is all stakeholders, and the what is a secure future and sustainable returns. When we consider the why, sustainability is a major priority because our current model of economic development has been unsustainable for too long. Overconsumption, rising inequality, environmental destruction, climate issues, and even human well being are among the byproducts of a system narrowly focused on maximizing shareholder value in the short term. Some governments and companies have recently stepped back from earlier sustainability commitments amid changing political priorities, but the underlying environmental, social, and economic challenges and the material risks and opportunities they create for investors have not disappeared. Responsible investment is the explicit consideration of sustainability within business and investments. Within investments, there is a spectrum of investment categories defined by their approach to sustainability. Aside from the obvious societal reasons, research has shown that there is a strong business case for incorporating sustainability. Changing consumer and investor demands, together with increasing regulation, are also influencing the behavior of organizations. When we think about the how of responsible investment, it is the ESG framework that we should be looking at. It's a widely accepted framework for explicitly understanding decision making from a sustainability perspective across the three pillars of environmental, social, and governance. Think of sustainability as the overarching objective and ESG as the means to get there. Within these three pillars, there are various factors, some of which are material to all companies and others specific to certain industries. A company and its executive team that have integrated ESG in a genuine way will take responsibility for raising their own standards and knowing the ESG factors that are material to their business. It is still evolving and some challenges remain, but there is now real momentum behind its application in business and investments. We still need to see much more consistency across stakeholders in the way it is applied and communicated. That will come about when more people genuinely incorporate ESG into their decision making and explore all the internal questions that will naturally arise. Ultimately, how the framework is used and what is prioritized will depend on the decision maker. When we think about who this is important to, all stakeholders need to incorporate sustainability. All leaders must understand the sustainability of their respective organizations. This requires them to look at the impact of their decision making on all stakeholders, including the environment. Within investments, company executives, investment managers, investment advisors, consultants, and trustees have a responsibility to take sustainability seriously. Fiduciary duty, particularly where there is an asymmetry of knowledge, is likely to place greater emphasis on understanding sustainability preferences and disclosing sustainability impacts. As awareness grows and clients continue to place greater emphasis on the impact of their investments, we also have to ensure higher standards are maintained. And that is where the what comes in. What are the motives behind responsible investment and thinking about sustainability and ESG within your investment approach? Each investor has their own sustainability preferences, which can in turn be reflected in their investment strategy. At a high level, responsible investment can contribute to a more secure form of economic development, a more secure future, and more sustainable long term returns. We have to reach a stage of economic development where our activity is in equilibrium with our ecosystem. If you want to understand just how important balance is within our natural environment, watch David Attenborough's documentary, A Life on Our Planet. The reality is that we need to wake up to our sustainability challenges to pursue a more sustainable form of economic development. For investors, the objective is long term sustainable returns. Investing is for the future, and it's therefore important that we have a secure future when we think about the environment and the planet we live on. We have to have a healthy planet if we're going to be serious about delivering long term sustainable returns for investors. Fiat currency cannot be eaten, nor can we drink it. The planet is what sustains human life and our entire ecosystem. We need to protect it for ourselves and future generations. We must evolve beyond our mentality of extraction. This is not about compromising returns. It's about delivering more sustainable returns in balance with the biocapacity of our planet and the well being of all species. Together, these four elements provide a practical way to cut through the noise around responsible investment. Sustainability defines the why, the ESG framework provides the how, the who includes all stakeholders, and the what is a more secure future and sustainable long term returns. Ultimately, responsible investment is about making better informed decisions today with a clear understanding of their long term consequences.